TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 7th, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And the easiest way to do that? Well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fantastic, fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow off 332. S&P down 38, NASDAQ 100 off 149 points. That's 2% to the downside. Russell is the least of the losers. That and the New York Stock Exchange are both down about 0.8%. The semis are off 28 points, 2 3/4%. The trannies are down 2.5%. Leading the charge to the upside, it is Tesla up 850. Allied Motion Technologies up 6. Science Applications up 5. To the downside, Booking Holdings, they're trading off $56 or 3%. Vail Resorts having a terrible day, off 16%. 44 buckaroonies, 839,000 shares have traded so far. Amazon down $40. So we have things to look at. Of course, I want to look at what you want to look at. We'll go to the first question that came in. This came in, I believe, early this morning. Or late last night, I believe it is 11:17. And this is coming in from Leonardo DiCaprio. And Leonardo says, hey, Steve. Hi, Steve. Hi, Leonardo. I bought Gush. G-U-S-H is the ticker symbol. Now, Gush, folks, if we take a look at that, that's the 3x bull position for the S&P 500 oil and gas sector. So I've got to stop in at $13. What? 13. Bought Gush at $12.90. Well, I guess we don't have to worry about that. That doesn't make sense. But I'll take a look at Gush, because if you had you bought Gush, you didn't sell. Oh, no, that doesn't make sense to me. But that's okay. Let's just take a look at Gush for Leo. The first thing is that in an ETF like this, it's so important to understand what the underlying instruments are. What is the makeup? What are the weightings inside it? So I just pulled up the actual non-weighted ETF. It's much easier to do that. That is ticker symbol XES. Yeah, XES is the ticker symbol here. And so this is going to be as of last night. I presume it would be as of last night. Yeah, 12/6. And you can see you've got Helmerich Payne, ProPetro, RPC, Inc., Rowan Companies, Halliburton, Transocean. So you got a bunch of, yeah, those are the fund holdings, the index top holdings out there. You really want to, and I won't have the time to do this, but you'd really like to go through at least the top 10 of these. Because the top 10 are going to represent 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Just simple math, around 40% of the weighting inside there. So that's what you really want to do in taking a look at Gush. If we just take a look at Gush and we didn't do that, here's what we would say. There'd be nothing good to report on in looking at Gush from a daily, from a weekly, from a monthly standpoint. The reason is because price is below any identifiable support, that being, or those being, the TAS market profiles for any of those time frames. So this set of charts is not going well. We know the uniform message that this set of charts will provide you and I. So we've got to go take a look at something else out there. Now, this is the XE. Oh, I see. It was Gush. I was looking at actually at the XES. Let me put Gush up on the screen. There we go. That's why it didn't make sense. Okay, back at you. But still the same thing. Now, here you're going to see some profiles that are a little bit closer, but Leonardo, this is what I have found. And the triples, go see what's really going on the individual, the singles out there. Pay attention to those profiles or that information more so than Gush. But I see the prices down. But if I take a look at it, so in keeping with that theme out here, if I do take a look at XES, what we're going to see, and I'll put Gush up here too, it should say the same thing, but this is the more reliable one. Today, what price has done, it's tested and it's rejected Stevie's red line. That level's 1136. Having done that, having a gap to the downside yesterday with volume, big volume, behind that move of 8.8 million shares out there, I don't see the reason to be bottom fishing here. I don't see a signal. I don't see a bullish reversal signal. I don't see a seventh wave move. I don't see a Tom DeMark setup account. I don't see any of those things that would suggest. And what I do see is price trading below Stevie's red line. It says you've got a falling price oscillator below zero on a daily time frame chart, and that is not a good thing. It's just not a good thing out there. So that's, I know it's probably not what you want to hear, but what you did want to hear. Now here's Gush, so we can see the Gush itself was moving lower, doing less relative energy out there. Okay, pretty decent. It is trading above Stevie's red line. Again, I'm not going to rely upon the information coming from a triple ETF when the single is really the better is the better way to go. So I hope that helps you out, and hope it didn't confuse you too much. All right, so only question that is nothing on deck. So go ahead and give me a call or send me an email, steve@tfnn.com. In the meantime, let's go check out these indices in the market, see what they're doing out here. So you've got the Dow's off 380, S&P is down 42, the index is off 2 3/4%. So that's where I really want to start, is really take a look at the NQ. Now, I'm going to look at the 60-minute time frame chart. So we're going to switch back probably between the NQ and the ES, maybe the Dow equity futures contract. We know, you and I, we know why price stopped where it did yesterday, don't we? Yes, because just like Leonardo, we're trying to find one of the tools or patterns that we use to identify tops, bottoms, where there could be a turn. You can see you've got that Tom DeMark setup trend line, that green dash line that held price. It was tested at 5 p.m. It was tested at 10 p.m. It was tested again this morning. That was yesterday. It was tested at 10 a.m. this morning. Significant level of resistance. So that's an area that the bulls would be looking for a move above. That's what the bears were looking for, to be able to sell into it. Now the question is, will the sellers be able to drive price down to the TD setup trend line, the red dash line? That's what I would be looking for there. You bust through that, it's no good for the bulls. And that ain't no bull. Right now, today, we're in nothing but a consolidating market in the NQ between 68.50 and about 66.40, give or take. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 417, S&P down 45. Order up. Yeah, Ruby is ordered. Take a look at platinum. First, take a look at platinum out here. So if we do take a look at platinum, well, that's not platinum. Here we go. We're going to take a look at 4 different time frames. You got a weekly, a daily, a 4-hour, and a 1-hour chart out here. And here we're also just stopping in to take a look at any levels of support created by our friends from TAS, their market profiles out here. As we take a look at the weekly, let's just start on the right-hand side. We're from a weekly perspective. We're going to finish out the week here, and Ruby does not look good because what took place this week was a test of the bottom of that profile. Very right-hand panel. That's what you're looking at. 816.40 was a test. You're trading now at 791. If I take a look at a daily time frame, the daily does not show us any kind of support out there. So we're going to have to go looking for some type of bullish reversal signal. I don't see that here, but we'll look at the other chart. That makes it much clearer for you and I. Looking at a 4-hour time frame chart, well, that doesn't look good either. When I say doesn't look good, I just mean that it's below key levels of support that we would rely upon. And in the 1-hour time frame chart, here is your consolidation. I think you mentioned you're looking at a consolidation. Well, the new consolidation would be between 786.40 and 796 out there. So very close to the levels that you were looking at. That's a brand new profile that formed as we came on the air at 1 o'clock. It's equally distributed. So neither bulls nor bears really have control of this entire box out here. That may not assist you with regard to your trading. So maybe what you're doing, Ruby, I don't know for sure, but you're just taking a look at this on an intraday time period. So there you go. Those would be your levels to be paying attention to. If you were looking at this for more of a long-term trade, which I could have understood 2 days ago, the reason why I could have understood 2 days ago was because, one, it was a hammer candle, indicates that the market is trying to hammer out a bottom. It was a time to mark setup 9 count. You see, the last time that platinum made a high, that made it with a time to mark setup 9 count out here. What we know about those 9 counts is that if there's going to be a turn, it'll either occur the day before, the day of, or the day after that 9th count. Well, a hammer candle, so that was pretty nice. Well, yesterday was not good to you. And it wasn't good to you because you had a close below the low of that hammer candle out there. So you got to watch today's activity. Even though we're trading inside of yesterday's bars, so to speak, out here, it looks really risky. It looks real. The only thing you can rely upon when we take a look at platinum, at least with regard to the time frame charts that you and I are looking at, is the daily. So I would just say to you, don't let it close below 786.40. That's your last bastion of hope with regard to the platinum. We take a look at the platinum futures. Let's go out to Worcester. They probably screwed that up and speak with Bill. Bill, thanks for calling. Thanks for holding. How are you? Correct my pronunciation, please.
I have a question on Oracle and ABX.
Okay. Go ahead. Fire away.
And Oracle, if you remember Oracle recently, Buffett announced a position in it, and I'm assuming he probably got in at the low 40s. And I'm wondering what looks like a good entry.
So, and is this for a, are you taking the Warren Buffett trade here? This is for a longer term type holding?
Yeah, exactly. In an IRA account, exactly.
Well, here's what you and Warren would prefer to see this thing do. And are you able to watch this on TigerTV, or should I just describe to you what it is?
Yeah, I'm on the screen right now. Yeah.
Got it. Okay. And have you taken a position yet? Maybe you said you did.
I bought a few hundred shares at 46.30.
Okay. All right. So here's what you'd really like to see this do by the end of the day, and that is I've turned off all price. But this week was also a brand new market profile. Now, market profile, what it does, it gives you ideal levels of support, resistance, and where everybody is camped out. Where everybody's camped out is 48.60. Support is 46.90. Resistance is 50.29. And the reason why I'm focused on the weekly chart is because you're more of an intermediate term trade for Oracle. If we take a look at where price is trading right now, remember the magic number here is really 46.90. We're trading at 46.57. Now, you might say to me, come on, Steve, is 30 cents or 33 cents or whatever it might be, really that important? Well, it is from the standpoint that it wouldn't signal to you and I that it's bottomed necessarily. So if you were to ask me, because you were going to be building a position, well, where would that next entry point be? I would really be looking at the 42.37 to 43.72 range out here. So here's what you know about Oracle and the Oracle of Omaha. Right now, the software has been in a consolidation, in essence, since about March of 2017. We're almost finishing 2018. Now, the range is this 42 area to 51. So I wouldn't say that there's anything that you and I could look at in this chart, Bill, to suggest that there's some type of huge move in this, and that you're better off from the longer term standpoint trying to get in on this around 42.37 to 43.72. At least that's what the weekly information is now providing for you and I today. If I were to take a look at the daily time frame, and I come over here and take a look at my white background charts out here, there's just no real signal yet that I see on here that says, okay, we've bottomed and you should fire away. So you're looking for a longer term position. I don't know what your money management strategy is on Oracle. I'm not saying you need to jump ship. I'm saying that you should anticipate that price will pull back further when we take a look at this. Also, from a weekly standpoint, here's the one positive. No, I can't even give that to you. We had a short trading week, right? Yeah. And so what I was going to say to you is, hey, look, it's testing the week of June 18th on lighter volume, and it's 166 versus 96 right now. So it probably is lighter volume if we divide it by the 4 trading days or less than 4 trading days. But that just kind of blow a fuse in my mind if I really try to come up with that number. So does that help?
Well, yeah, I mean, if it, it's a small position, so I'll keep my eyes out for that 42 to 43 area.
Yeah.
Catch it, yeah.
The only thing that would change that, okay, so you know what else to be looking for, would be some kind of sign of strength, some kind of wide-ranging bar and big volume moving to the upside. Short of that, I would say be patient and wait for about 43.72 and 42.37. The other Oracle guy, that's probably where he's looking at to be able to add to his position. All righty.
And a quick question, Steve. I've got a bet with my mom, and she's saying that you're probably the name Rhodes is probably of a Greek background.
Well, I wish so. My kids, because I was just eating a Greek salad. And if you were to ask me what's my favorite thing, it would be a good bowl of tzatziki with some nice, good Greek bread. How about you?
Yeah, that sounds good.
Okay, all right. Well, look, I love your mom for asking that question. We're going to go with yes. Somewhere deep in my heritage, I have to be Greek, but I'm not. All right.
Off the air, if you have time to look at ABX.
Yeah, are you long ABX?
Yeah, I just got in recently at 13:30.
13:30. All right. So we come back from this breakout here. I'm going to go finish my Greek salad. Literally, that's what I had.
Thank you.
That's what I'm eating right now. And then we'll take a look at Barrett Gold for you. Thanks so much for calling. Tell your mom we said hello. All righty.
Bye.
Take care. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the chart that's on the screen is gold, and it is a long-term chart out here, and it's really to make a point because we're going to take a look at Barrett Gold and get a feel for what it's doing. Now, what I want you to also – now, I'm not going to show you the chart that shows the correlation between the mining ETF, GDX as an example, or we could go look at the XAU or the HUI out here. It would show us the same thing, but it's directional correlation between metals, what they're doing, and the individual equities. But it is a direct correlation. So it means that to really answer the question about the mining equities, we should always take a look at, well, what is the actual precious metal doing out here? Now, the whole trick to getting the longer term trade correct, okay, is understanding what it is you're trading, how it's trading, not on your screen. Of course, it's important to see how it's trading on your screen, but the screen across the pond, such as in Greece, okay, who is trading in euros today, okay? So the Rhodes family in Greece would be trading in euros, and they would be looking at gold priced in euros. They could give OPA, they could care less about what gold is doing in U.S. dollars because it's their currency that they would be interested in. Just like, the Greeks in Tokyo tonight eating a little kompai sushi, they want to know what gold is doing in their currency. It needs to be breaking out. If you're going to get some type of long, protracted run to the upside or to the downside, you need to see it moving in all the same direction across the globe. And let's not forget our Brexit guys, okay, and gals out there. And that is referring to the folks over in the UK. So here you've got dollars, you've got yen, dollars, euros, yen, and pounds. You can see the huge move coming off of 2001 to the run in 2010 and 11 out there. And you can see, again, gold moving higher in all of those currencies. So that was a long-winded way to get there. But it's important to deliver that message out here because then it says, well, what's gold actually doing today, right? So let's go from a monthly time frame and take a look and see what's gold doing today. Well, here's the daily chart. So here's the daily time frame chart as we take a look at gold. And you can see that in dollars, it's trading higher nicely at 1:32 in the afternoon, trading at 12.52. What's nice about that is it is above resistance, the resistance of a prior swing point out here, and that prior swing point is October the 26th. That high is 12.52, so we're only above it by 60 cents. It would be nice for it to close above it, at least by 60 cents at day's end. Regardless, it is above resistance. You can also see that gold in euros, gold in yen, gold in pounds is also moving higher. So that's good. Let's get back to Barrick Gold real quickly here. So we take a look at Barrick Gold. It's moving higher, but doing so on a daily basis with lighter volume. Today's volume, 11 million shares, moving into the swing point from the trading day of October 23rd that had 29 million shares. So if you're going to ask me what is Barrick Gold likely to do, it will follow gold. If gold's breaking out, then what Barrick Gold should do, it should break above its resistance level. Light volume, no light volume, doesn't really matter. 1376 is a key level on a weekly basis for Barrick Gold. That's the top of its weekly profile. On a monthly basis, the level is 1410. So to answer your question, you'd love to see Barrick Gold close above 1410, not necessarily today, but in the oncoming future. All right, let's go out to New York and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Okay. How are you, Steve?
Doing very good. So IVOG, the S&P 500 mid-cap growth. Tell us what you're doing, how we can try to help you.
I'd like to buy it. With all this volatility, what price do you suggest?
It's a great question out here. And the what I'm going to do is really try to, you'd have to try to time it, I think, with the S&P 500 instead of the mid cap. So the S&P 500 as we speak right now, and what I'm looking at is the ES Mini. If you believe that the S&P is going to bottom today, then I would tell you right now is the time. The reason why I would say right now is the time is because price in the ES, and that's the S&P futures contract, is trading right at about the bottom of its daily profile level. It's a bullish structured box out here. It was tested yesterday, even though price had sloshed down earlier in the morning below that, and it closed back above, that being 2644.80. So I don't know if are you looking at this so if you're asking that question, now I'm not suggesting that you do that. I'm saying though that if you were inclined to believe that the S&P is bottomed, I would say then right here, right now is that moment in time. I'd like to be able to see something on some type of shorter term chart that says that that is the case out here, and I can look at one thing. And one thing only, and that is that when price pulled back this morning, it pulled back in essence right to this little red dash line. For those of you watching us on Tiger TV, that was a session from 12:30. That was yesterday afternoon. That's where the rally really began to get some legs out there. In essence, it's the bottom of that candle session, which is 26.41. So yeah, maybe there's some support. But what's your time frame for? Is this a longer term investment?
Oh, 6 to 12 months.
Yeah, I'm going to say you've got to sit tight and just wait. Just sit tight and wait. And the reason is because at this stage of the game, what we don't know, here's what we do know when we take a look at a monthly chart for the Dow. And it is just simply that it is in a consolidation. And so from a longer term standpoint right now, this consolidation can go on for a long time. When I say a long time, the average consolidation lasts about 70 plus weeks. So that's over a year. We're just in like week number 44 or 45 right now. So I think you need to be patient. Ideally, if the market will to pull back, and the Dow specifically, I know you want to get the mid caps in the S&P, you'd ideally like to be a buyer around 23,360 out there. And at this stage of the game, there's not anything that I'm looking at that says that that's not going to happen over the coming months out there. Not likely to happen today or tomorrow, but that would be the level I think that would be ideal for the longer term hold for you until we see something else in the markets that suggests otherwise. Does that help?
Yes. The S&P is down more than the this ETF. It's like over 10%, and this is.
No, I understand that, but if we take a look at their directional correlation, you know, the mid caps, we've got to. If you're looking for a long-term hold in the mid cap 400 growth ETF, you need to see the indices all move in the same direction. And now, I'm not saying that today, at the end of the day, that this can't be a. Yesterday was a bottom. Today is nothing more than kind of a retest of that bottom area, and that we see the market move higher starting on Monday and continuing because we're in this the trading range. So continuing for a week or so. I'm not discounting that, but from the longer term perspective, we're in this consolidation. Nothing could be more evident than what we just looked at, and I think from the longer term position, I think you're better waiting.
You expect the correction to continue?
I expect the consolidation to go on as it has in prior consolidations for more than 44 weeks. That's what I expect.
Okay. Thank you.
Okay, you bet. Steve Rhodes with TFNN. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So I know that John hung up. We were taking a look at the mid caps, but John, the thing that I want you to know, maybe you didn't see yesterday's show, and that's cool. This is a weekly chart for the Dow out here, and if we just take a look at the 2 prior consolidations that have taken place inside the Dow, the first one really took about 82 weeks. And that's going back to the high in 2011, right around the April high in 2011. And even though we saw a little break of it, the top of that consolidation in the February to April timeframe, price came back into it kind of during that sell in May, the June-ish bottom that normally forms out here. And it really didn't totally break and then begin moving to the upside until November of 2012. That was 82 weeks out there. The next consolidation that we have took place in 2015. In 2015, same mistake that Mr. 666 is making, who got all bearish out there. It was nothing more than a consolidation. We can see the tests at the top. We can see the tests at the bottom out here. And it really took there 77 weeks. So as I said, we're only like week 44 or 45 in essence into it. And so there's nothing at this stage here. It looked like we had a chance for romance to head back to the highs. And it looked like that when on the, where is the chart? Where's the chart? Where's the chart? Where's the chart? Well, chart's gone. It's gone. There's only one option. That option is go ahead and, oh, geez, Louise, what did I do there? That was not a good idea. Would be to redraw it. But trying to multitask here, sometimes the multitasking gets totally off base. But just give me a second. I'm going to pull this up so I can try to string together this thought. What we looked at yesterday was we looked at the Dow. I'm just going to stick with the Dow out here. And the Dow has made a nice bottoming pattern, but and it hasn't been violated. But when it made this pattern, this is around the October 30th time frame, that was the opportunity. Here's the chart right now. That was the time for the Santa Claus rally to really have kicked in. October 29th, that actual confirmation came on the 30th and then on the 31st out there. Now, we understood why the Dow, why the S&P slowed down when it had made those 9 consecutive closes above the close 4 bars earlier, otherwise known as a Tom DeMark setup. That's the system out here. You can see the 9 count that came in. That was on November 9th. The high, in this case, would usually be made either the day of, the day before, or the day after. Well, it was the day before out there. And it made a retracement, a normal retracement. But the retracement came, as you know, oops, Sorry about that. And I need to grab that call, but I can't. In any event out here. So we're now in a consolidation mode here. So the Santa Claus rally could have, should have, didn't take off. And now, really, all I would anticipate on the next bottom that happens inside of the Dow would just be to get back into the 26,000 area, 26,180, something along those lines. So even with inside the longer consolidation, we now have consolidations going on as well out there. So sorry to be long-winded, but it just, I don't really think, maybe it didn't sound to me like John totally got what I was saying, and maybe you didn't get what I was saying, and I wanted you to get what I was saying just so you could see it, just so you could say it wasn't something I was pulling out of my thin air, so my thin hair, so to speak. Okay, so there was a request if we could go take a look at the market profiles out here. So here they are for the daily, for the weekly, for the 4 equity futures contract, the ES, the NQ, the Dow, and the Russell 2000. Now, the Russell 2000 is really kind of interesting. The reason why it's interesting is it formed, well, it's not just the Russell 2000. The ES Mini did it as well. It formed a nice hammer candle, but it did it yesterday with one of those Rhodes Momentum Indicator signal bottoms. Now, if you and I were in candlestick class 201, not 101, but 201 out here, we would say the ideal spot to buy a hammer candle would be somewhere between 50% of the wick to the bottom. Well, if you take a look at the Russell 2000 right now, you're at 50% of the wick, or very close to it, being at 1455 out here. But we're not seeing any signals anywhere else for me to say, yeah, go ahead and fire away or something like that. But it is part of the reason that I said that it would not surprise me that on Monday, that today is a bottoming day. We might not see it by the end of the day, but on Sunday night, Monday, we could see the markets move higher. Don't take a trade on that. Wait for some kind of confirmation for some time frame out there, a short-term time frame, preferably. But that's and in the Russell 2000, in its short-term time frame, its 30-minute chart out here. Again, you can see where it's made its way back to about half of the into the lows of yesterday out here. So okay, enough about that. So Jay, I hope that helps you out with regard to the profile information that you were looking for. I don't see any other requests that are in the system, so let's just kind of tool around for the next couple of minutes. I didn't say fool around, I said tool around. Let's take a look at light sweet crude. Light sweet crude is up $1.32. What does that mean? Trading out at 52.82. Well, the only way for us to really understand that is to come take a quick peek. See what is it that light sweet crude is doing. So what we know about light sweet crude is it formed a brand new profile, daily profile, back at the end of November, right around the 28th, the week of the 28th, give or take out here. And we can see that 50.91 for the last 2, 4, 5, 6 trading days, 7 trading days has held the support. That's so strong support, some support at $50.91 a barrel. Doesn't mean that it's a barrel of fun and it's ready to take off at this stage of the game, because it's really just in the range between 54 and 51 out here. If it could get some legs, what you would be looking for is you would be looking for price to run into resistance at 58.16. The center line of that box at 55.74 is closer to the top of the box, and so sellers should be lined up inside that range, 55.74 to 58.16. If price could close above that, well, then you'd have a different story. But the real story probably appears on Sunday. And the real story is, hey, is light sweet crude about ready to form a brand new weekly profile? And the answer is it may be. And the reason that it may be is because what we can see is you've got a nice orange bar for the week. You see how these orange bars work? Not all the time, but most of the time out here, they identify that for that time frame, that a brand new profile is forming, just like they did here on the 4-hour time frame chart out here. So that's what I see when I take a look at light sweet crude. What else should we look at? Let's go take a look at Apple. Let's take a look at, why should we take a look at Apple? Just for the heck of it, because we want to see what it's doing. What is its meaning when we take a look at the NASDAQ 100? So we take a look at Apple. It's at its session lows, and it's below some swing points out here. So let's go see what it is doing, or at least try to take a peek at what it's doing while we're at a breakout here. It's taken out a swing point, appears to be, that had 44 million shares, and it's doing with light volume, 21.8 million shares out here. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So let's finish off Apple here, and we'll just try to wrap things up for you for the week. With regard to Apple, it has not traded below the bottom of a monthly profile for the most part. I can find one exception, but for the most part, since 2013. So if Apple is going to bottom, it either has or it's going to shortly. We just talked about how Apple's pulling back today into a breakout area. This is on the daily time frame chart. The breakout was May 2nd. There was 67 million shares. Today you're at 22 million shares. Hasn't hit the top of that breakout, which would be 169.20, but it's close enough. Close enough. So that's one area. The second, I was talking about the monthly chart. That's the very right-hand panel chart. You can see its monthly profiles on here, and you can also see that the bottom of the monthly profile is 167.91. The bottom we've seen so far this week is 170 even Steven. That doesn't mean it won't go lower, but if Apple's going to find support, it's kind of like right here, right now, which could be Monday or Tuesday as well. So is kind of keep it in a frame. It's in essence in this price range out here. So here's the summary of what we looked at today. It would not surprise. Well, first you've got to watch today's close. If today's close closes below yesterday's close, that's a bad scene. The reason why it's a bad scene, grab the wrong chart, and specifically, let's take a look at the S&P 500, because yesterday was a hammer candle for it, just as it was for the Russell 2000. You know, when you close below the low of a hammer candle, if you're long, you're wrong. You know that little rhyme out there. On the other hand, a hammer candle tells you the market's trying to hammer out a bottom. So this could be a short-term, make sure we understand it, this could be a short-term trading range. We can see the consolidation inside the ES Mini. All we have to do is go back, in essence, to the high of around October 16th, which was the high out here from November the 8th, which ended up being the high from December 3rd, the top of a consolidation. And the bottom being October 29th, the bottom being a hammer candle yesterday. This is our range in the S&P 500. Longer term, the Dow may head lower into January, February, something along those lines because of the larger consolidation pattern. Folks, have a fantastic weekend. We'll see you on Magical, Marvelous Monday. Be safe out there. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.